When you opened your first checking or savings account, you had to put money down, probably $25 or so to fund the account. In real estate, this transaction is called EMD, or earnest money deposit. This is one element of the contract between a buyer and a seller. These funds bind a buyer's interest in a property and gives the seller a reason to take their home off of the market. Couple of things to consider for buyers. First, the EMD should be a large enough amount to demonstrate your strong interest in the property. Two, if you decide to walk away without cause, this is called default, the EMD will likely be forfeited to the sellers as damages. Third, EMD is a credit to you and is counted in the down payment total that you will bring to closing. 4, how much should you put down for EMD when writing an offer? Consider 1% as the minimum. The more you put down, the more skin you have in the game. And for sellers, if a buyer writes an offer with low EMD, counter with a higher amount. 2, don't consider EMD funds automatically to be yours if the buyer gets out of the contract. There are provisions allowing a buyer to void a contract. If they don't have cause, then your realtor, the buyer's agent, and the entity holding the funds will hash out the distribution of those funds. 3, view EMD funds as an insurance policy for you taking your home off the market while the buyer is arranging funds to purchase your home. The terms around how much EMD will be and when it is due are going to be outlined in the contract. Be sure you're aware of how many days you have to get the funds submitted to the escrow or title company, and make sure that there are funds in the account you've written the check or wired from. And if your offer doesn't get accepted, no monies will exchange hands, so no need to stress over a check getting cashed unnecessarily. Okay, I had fun with this. I put a little jingle together to help you get what this is all about. In real estate, an EMD is paid to show the buyer's commitment made. It's a deposit, a pledge to represent, an insurance policy, a vital segment. For sellers, it's a sign of good to protect their interest as they should. The funds may not be theirs if the deal falls through. Agents will distribute a process they'll pursue. When you work with a professional, you want to know that they're qualified in the area of expertise that they claim. Take a look at this video I did on realtors and what they are and what they're not.